Today we will be showcasing an advanced 1-minute scalping strategy based on the smart money concepts which are used by professional investors, institutional traders, and other experienced market participants to identify the best points to enter into a position. The strategy is so extremely accurate and profitable that it will allow you to take your trading to the next level. Make sure to watch the full video because fully understanding the strategy is important to enter into profitable trades with it. The strategy we will be using is based on the following smart money concepts: order blocks, market structure breaks, and change of character in the price action. Along with this, we will also be using the RSI indicator to confirm the entry signals that are provided. Before we take a look at the strategy, it's important to understand how we will be using the indicators and concepts, so let's first quickly go over what these concepts are and how we will be using them. The first concept we'll use is order blocks. An order block is a zone on the chart where many people have placed orders to buy or sell an asset. These orders can create a zone of support or resistance where the price is likely to bounce off or reverse. Traders use order blocks to help them make decisions about when to buy or sell an asset. To spot a bullish order block in the chart, we will need to look for a bearish rally in the market. This is a part in the market where the price action was heavily trending to the downside. Once we spot this rally, we will need to take a look at a part in this downtrend where the price briefly consolidated. This will usually be somewhere at the low of the rally. We'll be drawing a box around this zone. Now extend the box into the future. This is a bullish order block. Let's take a look and see how the price will react. We can see that the price bounces from this zone multiple times because of the indication that there are a lot of buy orders at that zone. For a bearish order block, we need to look for a bullish rally in the market. Once we spot this rally, we'll look for a part in this uptrend where the price briefly consolidated, usually somewhere at the high of the rally. Now let's draw a box around this zone and extend it into the future. This is a bearish order block. If we observe how the price reacts, we can see that the price bounces off this zone multiple times because of the indication that there are a lot of sell orders at that zone. A break of structure occurs whenever the price breaks above the previous higher high or lower low. As you can see with this example, the price is constantly breaking above the higher high, meaning that a break of structure is occurring. However, if the price were to break below the higher low, this would mean that there has been a change in the character of the price action, indicating a trend reversal. Now that we have covered all of the smart money concepts that we will be utilizing, let's take a look at the RSI indicator and how we will be using it. According to Investopedia, the Relative Strength Index, RSI, is a momentum indicator used in technical analysis. RSI measures the speed and magnitude of a security's recent price changes to evaluate overvalued or undervalued conditions in the price of that security. We will be using the default RSI indicator on TradingView, however, we will be changing the colors to make it more visible. The RSI has two main ways people interpret it, the first way being by looking at the overbought and oversold zones on the RSI. The price is considered overbought when the RSI is above 70, indicating that the market might be heading downwards. Whenever the RSI is trading below 30, it's considered oversold, indicating that the market might be heading in a bullish direction. Even though this is an easy way of reading the RSI, this method doesn't use one of the most powerful features of the RSI. This feature is divergences. An RSI divergence occurs when the price of an asset and the RSI indicator move in opposite directions. A bullish divergence occurs when the price makes a lower low while the RSI makes a higher low, indicating that the momentum is starting to shift upward. We see this happening here. As you can see, the price is making lower lows. However, if we look at the RSI, we can see that it's making higher lows. As you can see, this caused for the price to move to the upside. Conversely, a bearish divergence occurs when the price makes a higher high while the RSI makes a lower high. We can see this happening here. This indicates that the momentum is starting to shift downward. This indication is confirmed when we see that the price indeed moved to the downside after this divergence occurred. Now that we know exactly how we will be using the smart money concepts along with the RSI indicator, let's take a look at an overview of the strategy. First, we will take a look at the price action on the 15-minute time frame. On this time frame, we will be looking for order blocks. Once price reaches these order blocks, we will switch to the 1-minute time frame. On this timeframe, we will want the price to switch trends performing a change of character. We will also want to draw a new resistance or support point on the 1-minute timeframe. For the confirmation, we will be using the RSI indicator. There will need to be a divergence validating the signal. Finally, we will enter into the position when the price action reaches the resistance or support point on the 1-minute timeframe. Now that you know what strategy we will be using, let's take a look at some real example entries. But before that, if you are looking for a broker that has extremely low commissions and spreads, then check out Henko Trade. The best broker to trade forex, indices, commodities, or crypto. They have live chat support so that any questions you may have can be quickly and easily answered. One of Henko Trade's most prominent promotional offers is the matching deposit bonus that can be claimed when you open an account with Henko Trade. Sign up via the link in the description to register with Henko Trade and get access to all of these perks. For a buy position, we will first be looking at the price action on the 15-minute time frame. We instantly notice that a bullish order block has been created here. This is because there was a brief pause in the uptrend. Let's draw a box around this order block to make it clearer. We also see a break in the structure of the price because of the price action reaching a higher high. Now let's wait for the price to reach the bullish order block. Once the price has reached the order block, we'll need to see that the price rejects off of the zone. As you can see, this occurs here. When these conditions have been met, we'll switch to the 1-minute time frame. On the 1-minute time frame, we can see the following. The price has been in a large downtrend but is now starting to slow down when it reached the bullish order block. We also see that the second condition has been met. This is because we can see that a change in character has occurred because instead of making a lower low, the price made a higher low, indicating that the trend is switching back to the previous uptrend. This has caused for a new resistance zone to be created. To confirm the signal, we'll enable the RSI indicator again. We can see that a bullish divergence has occurred. This is because the price action made lower lows here, whilst the RSI indicator made higher lows, indicating that the price might be headed in the upwards direction. This means that the final condition has been met. We will enter into the position as soon as the price breaks through and respects the resistance zone, turning it into a support zone. As you can see, this occurs here. Now that we have entered into the position, we must be careful to manage our risk effectively. We will place the stop loss at the recent swing low to minimize potential losses. For the take profit, we will target a risk-to-reward ratio of at least 2. However, if the take profit is close to the swing high on the 15-minute time frame, we will target that price for the take profit. Now let's see how the trade plays out. To enter into a sell position, we will first take a look at the price action on the 15-minute time frame. We'll need to see that the price has formed a bearish order block. We can see this happening here. We'll also look for a break in the structure of the price. This occurs here in the form of a lower low. Once these conditions have been met, we'll wait for the price to reach the bearish order block before switching to the 1-minute time frame. As you can see, this is the case here, so let's switch to the 1-minute time frame. On the 1-minute time frame, we'll need for the uptrend that occurred while the price moved to the bearish order block to reverse into a downtrend. This means that instead of making higher lows, the price will need to make a lower low. This shows us that there has been a change in character in the price action, but before this occurs, let's first take a look at the other conditions. We see that a new resistance zone has been created. Let's draw a line here to make it more visible. To confirm the signal, let's enable the RSI indicator. On the RSI, we'll be looking for a bearish divergence. We see that this played out here because the price was making higher highs whilst the RSI made lower highs. This means that all of the conditions have been met. We'll enter into the sell position as soon as the price retests and respects the resistance zone, meaning that the price returns below the resistance zone. We will place the stop loss at the recent swing high. For the take profit, we will target a risk-to-reward ratio of at least 2. However, if the take profit is close to the swing low on the 15-minute time frame, we will target that price for the take profit. Now let's see how the trade plays out. I hope you enjoyed the video and could learn how we can use this advanced smart money concept trading strategy with the 1-minute time frame to take profitable trades. Please leave a like on the video and subscribe to the channel for more.